Let's take an inside look into what medical plans and benefits are being offered for Nexion's 2022 open enrollment period. Open enrollment begins on September 19th and ends on September 30th, and all associates must either enroll in or decline benefits to have coverage effective November 1st. This year, we have 3 medical plans to choose from, and our goal is to help you understand which plan may make the most sense for you and your family. The first plan is known as the PPO 1500. Choosing the PPO 1500 plan offers the lowest out-of-pocket costs, but will give you the highest bi-weekly payroll deduction. What this means is you will have the lowest copay expenses at the doctor and for medication, but this plan costs the most each paycheck. The second plan is known as the PPO 5000. Choosing the PPO 5000 plan offers a middle ground of slightly higher out-of-pocket costs, but slightly lower bi-weekly payroll deductions. The third plan is known as the Deductible HSA plan. Choosing the Deductible HSA plan will give you the highest out-of-pocket costs, but the lowest bi-weekly payroll deduction. Your out-of-pocket expense is high until you meet the $5,000 deductible that year, when the insurance will then kick in and help share your costs. In this plan, certain medications used for chronic conditions are covered at 100% without having to meet the deductible first. To determine if your medicine is deemed eligible, please contact our benefit specialist at 833-9-NEXION or email nexion@hubinternational.com. You can see from this chart that your bi-weekly payroll deductions for 2022 for each plan would be $128 for the PPO 1500, $86 for the PPO 5000, and $49 for the Deductible HSA plan. One unique feature that we are adding this year during open enrollment is a predictive software that can automatically suggest a medical plan that best fits your situation based on your answers to several questions posed during the enrollment process. Let's dive deeper into our Deductible HSA plan and its brand new benefit implemented this year, a health savings account. Only for those enrolled in our Deductible HSA plan, an HSA or health savings account is a type of savings account that lets you set aside money on a pre-tax basis to pay for qualified medical expenses. Unlike an FSA or flex spend account, the money you put into your HSA rolls over year to year and will never expire. Once you have contributed a total of $1,000 to your HSA, you can begin investing with that money and taking advantage of the full triple tax benefits this account gives you. 1. Your money goes into this account pre-tax. 2. This money grows tax-free. 3. Your withdrawals from this account to pay for qualified medical expenses are not taxed. 2022's maximum contribution limit is $3,650 for self-only and $7,300 for family coverage. Individuals 55 or older can make an additional catch-up contribution of up to $1,000 per year. Now, let's take a look at 2 scenarios that show examples of potential costs between the 3 plans if you enroll as an employee and spouse, and also if you enroll as a family. If you and your spouse make steady use of your healthcare benefits, have several office visits, go to physical therapy, and take a preventative or maintenance medication, then this example is best suited to help you decide which plan to settle on. You can see that the annual premium cost for employee and spouse is $12,532 for the PPO 1500 plan, $10,322 for the PPO 5000 plan, and $8,632 for the Deductible HSA plan. Some key differences would be prescriptions for sinus infections, which cost $15 under the PPO 1500, $20 under the PPO 5000, and $75 under the Deductible HSA plan. 5 office visits, which cost $100 each, would cost you $150 on the PPO 1500 plan, $200 on the PPO 5000 plan, and $500 on the Deductible HSA plan. Total costs from everything you see listed on this chart would run you $13,402 in the PPO 1500, $11,387 in the PPO 5000, and $11,092 in the deductible HSA plan. From this example, if you chose the deductible HSA plan, you would have still saved an additional $2,310 in services compared to the PPO 1500 due to paying $150 less in bi-weekly premiums. If you just put half of those savings, or $75 in an HSA account, you would have an HSA balance of $1,950 at the end of the calendar year that would be available to help with paying those additional charges. Paying less in bi-weekly premiums and contributing to an HSA decreases your taxable income. This next scenario covers how much you may spend if you and your family of 4 make steady use of your healthcare benefits in a year. You can see that the annual premium cost for the family plan is $15,860 for the PPO 1500 plan, $13,364 for the PPO 5000 plan, and $11,154 for the deductible HSA plan. Some key differences would be if you had 5 primary care visits in the year for your child, the PPO 1500 plan would cost you $150 for all 5 visits. The PPO 5000 would cost you $200 for all 5 visits, and the deductible HSA plan would cost you $500 for all 5 visits until you satisfy the $5,000 deductible. If your family had 8 specialist visits in the year at $200 each, the PPO 1500 would cost you $480, the PPO 5000 would cost you $560, and the deductible HSA plan would cost you $1,600. Of everything you see listed in this chart, including annual premium cost plus every medical claim you and your family had this year, your total cost for medical coverage would be $20,848 in the PPO 1500 plan, $19,880 in the PPO 5000 plan, and $21,130 in the deductible HSA plan. By choosing the PPO 1500 plan, your financial responsibility is $282 less than if you would have enrolled your family in the deductible health plan. However, if you enrolled in the deductible HSA plan, your bi-weekly premiums would be cheaper by $181 per pay period. This is money back in your pocket. If you put just half of what you saved, $90, on that bi-weekly premium in an HSA tax-deferred account, then at the end of the calendar year, your account balance would total $2,340. In summary, the PPO 1500 and PPO 5000 options are great for individuals or families who will require multiple doctor visits, surgeries, and continually use healthcare benefits. The deductible HSA plan is an excellent choice if you are healthy overall, have only just a normal amount of doctor visits and medical care per year, and provides you the option to begin investing with triple tax advantage savings in a health savings account once your balance reaches $1,000. We hope this information has helped inform you to make the best decision for you and your family. If you have any questions, please contact our benefits specialist at 833-9-NEXION or email nexion@hubinternational.com.